Due to the many living pressures Australians are facing, there have been calls for the Big Four banks to introduce 40-year home loans. Normally, many people are accustomed to 30-year home loans as that's what most lenders offer. But did you know that there are actually a couple of lenders out there in the Australian market that actually allow 40-year home loans? You may be saying, why on earth would any individual want to extend their home loan? Wouldn't that mean they essentially pay more interest down the road? And yes, that is correct, they would pay more interest down the road. However, there's one benefit to this, is that as you've increased the duration of the loan, your monthly repayments would be smaller. And this can benefit a couple of demographics. But to illustrate this example in a simple, consistent format, I've gotten a table from finder.com, which I'll place now. So here you can see in column 1, we have a 30-year mortgage, and in column 2, we have a 40-year mortgage. Both the loan amount is $500,000, and the interest rate is 2.5% for both of them. You can see that the monthly repayment for the 30-year mortgage is $1,975. And for the 40-year mortgage, that same monthly repayment is $1,000.650. So essentially the difference is around $325 in monthly repayments. Now, going over to the total interest paid, we can see that the 30-year mortgage, you would pay a total interest of $211,000, which is quite a lot. And if you went with the 40-year home loan route, you'd be paying a whopping $291,000. That's huge, just by increasing the duration to 10 years. Now going on to the next row, the total amount paid for the 30-year mortgage would be $711,000, quite a lot. But if you went with the 4-year home loan route, you'd be paying $791,000. $791,000. How insane is that? And they've also got the result at the bottom, which essentially means if you went with the 30-year mortgage route, you'd essentially save $80,000. But if you went with the 40-year mortgage route, you'd be paying $80,000 more. And this can be quite scary, and I hope it better scare you, because you're essentially paying a lot more money than you have to. So you're asking, why would anyone do this? I'll get to that point now. Just before I go on to describing what sort of demographics sort of require this or how it would benefit them, let's quickly just touch base on the pros and cons. The first pro that we can obviously see is that your monthly repayments will be lower, which is quite good. Another pro can be that you can borrow more from a bank if you want to buy an investment property because your monthly repayments is lower. Another thing can be a pro in a sense is that if it's a variable loan, you can essentially pay it off faster. You can do additional repayments, put money in the offset. So it really doesn't matter. Sure, you've extended to 40 years, but you can just make additional repayments and cut it down. So that can be beneficial. Now going on to the cons, the biggest con is that you'd be spending a lot of money just going excess in interest, which is quite a shame. And you don't want that money just to be wasted because that's your hard-earned money. Another con would be that you will not build equity as quickly as you would in a mortgage with the shorter term because you're not paying any money down. You're simply just extending the loan. Most of that money, remember, the amortization schedule, most of the money you pay during the early years of the home loan would be going predominantly towards interest. Only a small amount would be going towards principal. So that's the thing you got to keep in mind. The next con is that you will stay in debt for a whole decade longer than most borrowers. So if your peers went with a 30-year home loan, let's say they didn't redraw anything and they just paid it off during that duration, they're debt free. But you, on the other hand, on the 40 years, that means you have an extra decade to keep paying. And that's assuming you didn't make any additional repayments or whatsoever. So these are the clear-cut sort of pros and cons that I thought I'd share just before moving on. And I hope it makes sense and sort of clarifies why some people may do it and sort of hints to what the next section will be. A 40-year home loan, if you went with the above scenario, is quite stupid. You're essentially just paying more, right? What's the point? At first glance, yes, this is the problem, and especially if you consider numbers, $500,000 and a 2.5% interest rate, that is very unusual and very unrealistic in some sense, because a lot of house prices now around 850 million, and interest rate is sure as hell not 2.5%, more like 3.5 to 4% or so, even higher if you're a new borrower. So that interest paid over time will be huge. 80,000 was big enough, but that'll be even bigger disparity. So who's this suited for? Like I said, this is suited for investors or people just looking to get into the market of investing, I generally say. Maybe you don't want an interest-only loan, you still want to sort of pay down your principal gradually, but you want to reduce your serviceability and make it easier to borrow another loan. This strategy is suited for them. Normally, many people are afraid of the idea of debt because they see debt as damaging, and that is true. There's good debt and there's bad debt, but this can truly assist with your property investment strategy because you're simply just making your life easier because you're lowering the monthly repayments and you can borrow more. And another thing with that is that if you've bought a property, you know, it's capitally appreciating around 8 to 10% or so, you've just given more time for it to appreciate, which is quite good. And things that property investors do would be like, they'd buy a couple more properties, maybe 2, 3, 5, maybe even 7, sell off a couple, have them all paid off. So these are some things you can do. In some sense, you can think of this as somewhat of an alternative to the popular strategy of going interest only, which is still generally better, but this way you're still somewhat paying principal, even though it's a little principal due to amortization schedule, but it's still something. So now you may be thinking, well, how much can I get fixed? How much can I get variable? Is this a special sort of product? Well, there's a couple of lenders offering this, not too many, but essentially in Australia, we can only really fix a loan for between 1 to 10 years or like 1 to 5, but really 1 to 10 years is really where we can fix it. It's not like America where they can fix it for 30 years. I wish that was the case here, but we unfortunately do not have that capability. So that means the majority of the time in this loan will be variable, which means it's subject to interest rate hikes and things of that nature. So it won't be a fixed amount monthly, which is something that you just got to take when it comes to this sort of loan. And hopefully more options will open up in the future, as in Australia we eventually went from like 25, 30, I think 35 sort of years is going to become mainstream, then 40 will come, but just with the, you know, cost of living going up and wages not increasing, so it's bound to happen eventually. Ultimately, I hope this video was quite useful in a sense that it gave you a bit of awareness, and I hope to start a discussion around this, because I asked many people in my friend group and family, but not many people know about 40-year home loans. Everyone defaults to 30, or they somehow reduce it, but 30. So I hope this video sort of gave you awareness and sort of showed you that there is actually a bit more, and the whole lending space is actually crazy. I'll make more videos on this, it's quite fascinating, but this was just one of those things I thought I'd illuminate, because many people out there would probably be struggling a little bit, especially with the pandemic, things of that nature. So hopefully this can propel you to look in a different direction and see that, oh, I can actually take this sort of loan. So I hope it helps, hope it spreads awareness, and hope that this video has been somewhat educational and you've learned from it, and possibly share with your friends and family and see their opinions. But aside from that, I thank you for watching. I truly have a good time making this video, and I hope you enjoyed it. I'll catch you next time again on Saturday. See ya.